Okay, so, all right, I think I got this all up and running properly. So, hi everyone, I'm Mary Ann. I'm a licensed insolvency trustee with Allen Marshall and Associates, and also known as Dr. Debt because I help people have happier, healthier finances. And so this is my first time doing live with this platform, so just bear with me. We might have to work through a few technical challenges. And I'm joined by Lola Gentile. Did I say that right? Is it Gentile? Yeah. Lola, and Lola is a mortgage broker, and we're going to talk about reverse mortgages. And so I'm going to have Lola tell us a little bit more about herself, and just forgive me if I'm looking around a little bit while you do that. I'm just trying to make sure everything's operating properly. So Lola, who are you and what do you do?
So my name is Lola Gentile. I am a mortgage broker with Premier Mortgage Centers. I've got about 28 years experience in finance. I worked for a major Canadian banking institution for 20 years, and I have been an independent mortgage broker for the last almost 9 years now. And I basically do all kinds of financing: first-time home buying, cottage purchases, investment properties, and of course, reverse mortgages as well.
Awesome. Thank you so much. Still trying to find something. Oh, there we go. I found our live video. I have Facebook running on my phone as well.
Okay.
Like I said, this is all a little bit new to me, so I'm going to have my phone running in the background as you and I are talking, and that's just so I can make sure if anybody comments on Facebook Live, we can see that as well.
Sure.
Okay. Yeah. So I think I got that straightened out there. All right. So thanks so much for popping in with me. And this is, it's not going to be a overly long discussion, but I think it's an important one. And I know that I often get asked about reverse mortgages. And when I do presentations, I'll talk about, different options. I mean, typically people come to see someone like me because they're experiencing some kind of financial challenges. They're looking for some options and solutions on what they can do to overcome them. And, if filing for bankruptcy or doing some kind of a debt settlement isn't the right thing for them, then we start to look at things like, can you talk to a mortgage broker? Can you talk to your bank? Can you look at some of these other options? So it's very common for me to refer someone to, someone like you to look at, well, maybe there's some kind of financing you can do around your house. So just before we get into the reverse mortgages, I just want to talk about some of the other kind of typical ways that someone would do financing. So first of all, and I know I gave you kind of a list of questions and I'm off track now, but that's okay.
It's okay.
Yeah. So I'm kind of taking one and bumping it up. Well, just because I kind of want to set the stage for this. So normally, tell me about a situation where someone would normally reach out to you and what it is that they're trying to accomplish. And there's probably going to be 2 or 3 variations of that.
Yeah. So normally, I'm finding, especially in the last 3 or 4 years. So obviously 20 years ago, when it was time to get a mortgage, everybody always went to their bank. The mortgage broker sort of came about in the last 20 years because we're experts in our field in the sense that all we do is mortgages, whereas people in banks, and this is not to disparage them because I was one, but people in banks have to be, jack of all trades and master of none. You were doing mortgages, investments, credit, all of those things. And of course, they only had one product to offer as well. If it's Scotiabank or RBC or CIBC, they have their own product and that's it. Whereas a mortgage broker, who's an independent consultant, we represent multiple lenders. I personally have 22 different lenders, both A and B lenders, we would call them, available to me, as well as private lending. So it would be a very, very rare situation that I could not get financing for someone regardless of their financial situation, be it, unique income from self-employment or previous bankruptcy or someone in the midst of a consumer proposal, that sort of thing. Banks really want very, very clean applications with, steady income, very good credit, very little debt, that sort of thing. And if there's any bumps along the way, they're very picky about, who they'll lend mortgage money to. So mortgage brokers sort of filled a gap where we could shop that mortgage around to multiple different lenders, and there's always a lender available. So nowadays, somebody reaches out to me primarily because if you call your bank, regardless of which bank it is, odds are you're going to wait a minimum of 24 hours, sometimes 48 hours or longer, before your branch person can get back to you. Whereas with a mortgage broker, we're available 7 days a week because this is our livelihood. We're more, we're going to respond as quickly as possible. We have all of the answers that you're looking for. Sunday afternoon at 4 p.m., you've been through an open house and you want answers now. So we kind of fill that need of, answering my question now versus waiting until Tuesday afternoon when I might be on the phone when my banker calls me back. So, and as well, we can offer different options that you may never have thought of as a customer.
Yeah, thank you. I'm a fan of Mortgage Broker. I mean, I've used them myself. I've referred many people to you and other mortgage brokers in my circle. And I just, to me, it just seems like a kind of a no-brainer move, whether you're going to go talk to your bank and see what they can do for you in terms of getting a new mortgage or renewing, and then, talk to a mortgage broker. It's always good to get second opinions. It's always good to, shop around and make sure you're getting the best deal possible, for sure. Yeah. So reverse mortgages are a little different. So, I mean, a traditional mortgage is, of course, you borrow money against your home and you pay it back over monthly payments over a period of time. But reverse mortgages are, a different beast, right? So tell me a little bit about what a reverse mortgage is.
So the first piece of a reverse mortgage, you have to be a minimum of 55 years old in order to even qualify for one.
Oh, okay.
The younger you are, the less money you will get. The older you are, the more money you will get. So it seems kind of counterintuitive, but it's illegal to discriminate against someone based on their age when it comes to doing a traditional mortgage. And I have had customers into their 80s who buy a house or buy a cottage or whatever, refinance their existing home. And with a traditional mortgage, you have to qualify based not only on your credit history, but on your income. And traditionally, once we retire, our income drops significantly. And at that point, you're usually accessing your investments, if you have them, to supplement your CPP and your old age security pensions. If you're lucky enough to have a traditional employment pension from an employer you were with for 20, 30, 40 years. But a lot of people are dipping into their investment money at that point to supplement their pension income. And normally, pension income is not enough to qualify for a traditional mortgage. So that's why people who are retired or older find it difficult to qualify for a traditional mortgage. A reverse mortgage is for someone who owns their home free and clear, or they may have a very small mortgage against it, but don't qualify for a traditional mortgage based on whatever their financial situation is. And a reverse mortgage is not qualified based on credit or income. A reverse mortgage is going to be qualified first on your age. So as I said, a minimum 55 years old. And then secondly, it'll be on the property itself. A property that is located in downtown Dartmouth is going to qualify for a higher mortgage than one would say in Yarmouth, simply because they do qualify it based on the population base around the property, the potential for resale, all of those things. They will qualify it on that. So if you're located in an area where resale is slower, you would qualify for less. And a reverse mortgage, the maximum amount you can borrow is 55% of the value of the home. So the odds of there ever being a loss to the lender are minuscule. And it really doesn't happen because they're not allowing you to borrow more than 55% of the overall value of the home.
Right. Couple things I just want to comment on there. And just before I do that, I finally figured out how to see us on Facebook while we're doing this. So I can see who's popping in. So anyone who's watching live, if you do have a question, feel free to post it in the comments, and I'll bring that forth. And Lola, if you want, as I'm talking, if you want to kind of figure out how to do that, you just go into Facebook, click on our video.
Sure.
Just make sure your volume's down all the way, or you'll hear us talking in two places. So as I said at the start of this, this is a brand new platform I'm using, so we're just getting used to it. And Lola's my first one. So hi, Lisa. Lisa, I see that you're watching, and Twyla are watching. So hello to both of you. And this is actually broadcasting on YouTube as well, and I haven't figured out how to interact with that yet. So we'll work out some of the kinks. Anyway, coming back to our discussion. So just say the age thing again. I just want to make sure I heard that. So you said the younger you are,
the less money you'll get.
And the older you are, the more money you'll get.
Correct.
Okay.
Yeah. So that's how that works.
That so I can wrap my head around the logic.
Because a reverse mortgage is not income or credit qualifying, obviously, if you're under the age of 55, the odds that you are working full-time or have a career or whatever are pretty good. So you should be able to qualify for a traditional mortgage. Whereas once you're 55 and older, it's likely that you could have retired early. So you may be getting into a point where you do need those funds. So that's why there is an age restriction. And the older you are, the bigger the benefit is to you. Okay. The oldest customer that I'm aware of that did a reverse mortgage was a couple of years ago. She was 103 years old.
Holy Moses. Okay.
And the only
she
reason,
would not get traditional financing.
No, she wouldn't.
Perform.
But the reason she did it, to be perfectly frank, it's not that she needed the money. She simply wanted to see her grandchildren and great-great-grandchildren enjoy the fruits of her estate before she died.
Yeah, we're going to hold that thought just first. Yeah, because I want to talk about that. So, so I just wanted to make one more comment before we do, because I think that's really important. Location I find interesting. I've run into this a lot because, again, people come to us, because they're seeking some help. They've already gone to their bank. They've tried to do some financing. Maybe they've talked to a mortgage broker. And we used to run into this a lot in the rural areas. I mean, we still do, where, I mean, right now it's challenged kind of everywhere, but financing that home, in Yarmouth or, in some, obscure part of the province, not in your main centers. And even where I live, right, in the Hubbard's Queensland area, it's, a little more challenging just because you're not in kind of that hot spot area. And so getting financing can be a little more difficult. So you were just talking about one of the benefits of a reverse mortgage. And so that's my next question. What are the pros? Tell me about the advantages of a reverse mortgage versus a traditional mortgage.
So there are so many pros for a reverse mortgage. I mean, obviously the biggest ones, a lot of people work all their lives to pay off their homes so that when they retire, the major debt of the mortgage is gone. But of course, when they retire, they're living on less income. So they may find that they're incurring a lot of debt that they hadn't planned on, and they're dipping into their investments. Well, when you dip into your investments, you're losing a portion of those right up front, because when you withdraw them from, say, an RSP or a RIF or even a mutual funds account, there's withholding right at source by the lender who holds it, or the investment person that holds that money. They have to withhold money right at the source. Then you have to further claim that income on your tax return so that the government can tax you. Because if you had invested that money into an RSP, the government gave you a tax break at the time you invested that money, with the understanding that down the road you're going to withdraw that money so that they can then tax you and recoup the tax break they gave you 20 years previous. So the first benefit of a reverse mortgage is it's 100% tax-free. If you own a home that's worth $400,000 and you qualify, say, for a 50% reverse mortgage, you can take $200,000 in cash out of your mortgage tax-free. You can choose to take it as one lump sum. You can choose to take it as a $100,000 lump sum and have the other $100,000 paid out to you on a monthly basis until that runs out. You can choose to take the $200,000 as a monthly payment to you, and then the bank, Home Equity Bank, will administer it so that you're supplementing your pension and you don't touch your investments. So you're not incurring that tax burden. And the other piece with a reverse mortgage is you don't have to make payments. You can choose to make payments. They will not stop you. But you don't have to make payments. So you could legitimately be getting $1,000 or $2,000 or $5,000 a month. You choose that amount, and you don't have to make payments. It's not that you don't have to repay that money. It's that the lender will capitalize the interest to the balance of the mortgage. And
I'm just doing a little warning because I'm working at home and I hear someone coming, so I'm letting them know I'm on a live call.
Okay.
Oh, it's my puppy dog. Okay, keep going.
There you go. So no. So I mean, those are huge benefits. I mean, I know so many people, my parents included. My parents are 73 and 80 years old, and they own their home free and clear. And I mean, to this point, they're healthy and they have investments and but they're the type of people that would benefit from this type of product because it will supplement their pension income. And I've actually mentioned to them several times, you guys are taking a lump sum every year out of your investments to supplement your pension. Why wouldn't you consider a reverse mortgage? But of course, a lot of people, they're weighing the pros and cons, and maybe they don't want to go down that road, but it is a very, very exceptional product to help people who are retired and who are senior and may need that money. Another benefit of it is if you need help, if you have physical limitations, if perhaps you have a spouse that's ill and you don't want to leave your home, but you require, say, a nurse to come to your home for 4, 6, 8 hours a day, maybe 3 or 4 days a week. A reverse mortgage can actually supplement that so that you have the money to pay someone to help you with that so that you can remain in your home.
And we don't even have to talk about how important that is today.
Exactly. And I mean, so many elderly people want to stay in their homes, have family that live away, or maybe they don't have children that can help them out. And this is a huge benefit. This is a great, great thing.
Yeah. So let's flip that and let's talk about what are the cons. So what are the disadvantages of a reverse mortgage?
I mean, that's a really difficult. I haven't had any personally disadvantages that I've seen. I just did one for a customer, and it was her second reverse mortgage. So I suppose the only con in that specific situation was that when she paid out the original reverse mortgage, there was a significant penalty because
did she pay that out? Did she take out the reverse mortgage and then pay that monthly, or she took that out because she needed the cash flow, and then when she was able to, she paid it back in a lump sum?
So in that specific situation, she took it out because she needed the cash, but the property was located in Ontario. And then they decided they wanted to retire, they were already retired, but they wanted to move to Nova Scotia. So they sold their home in Ontario. So of course, when you sell your home, the first thing that gets paid out is any mortgage registered against the home. The reverse mortgage got paid out. We did a new reverse mortgage on the new property because they didn't qualify. But like I said, the con in that situation was that the penalty was quite large. However, because of the customer base, Home Equity Bank is really, really good at working with their clients, and they actually refunded 60% of that penalty upon the closing of the new reverse mortgage.
Okay.
Which, I mean, I've yet to have a bank refund any portion of a penalty, but in this case, it made sense to them. These people have gone from one mortgage to a second mortgage with us. Why wouldn't we want to make them happy?
Okay. So one of the perceived disadvantages of a reverse mortgage that I've heard from people who've kind of asked me about it, looked into it, is, and maybe this is a myth, is the interest rate. So can you tell us a bit about how the interest rates vary on a traditional mortgage versus a reverse mortgage?
Right. So the interest rates are higher. There's no question. But so today's best rate on a 5-year fixed mortgage, which would be insured, shall we say, so less than 20% down, would be about 2.69. And the traditional rate on a reverse mortgage today would be about 4.99 to 5.49.
Okay.
So
And correct me if I'm wrong, but with the traditional mortgage, because you borrow the money and you pay it monthly, that's a
correct.
requirement. With the reverse
Yes,
mortgage, you take the money out, you can pay it monthly, but you don't have to. You can just pay it off at some point in time.
correct.
So would you essentially be paying a lot more interest even with the same interest rate in that scenario?
You would be paying more interest, but not a whole lot more interest. And I do understand, the argument that the interest rates are higher. However, you've got to kind of look at it from the other side. With reverse mortgages, traditionally, 70 to 80% of the people who take out reverse mortgages don't make payments.
Yeah.
So, you've got a lender lending millions of dollars annually to thousands and thousands of customers, but with no repayment to them. They're paying out money monthly. The benefit is, of course, is as these homes are sold, that the mortgages are repaid, but it's the cost of funds, right?
Yeah.
And when you're looking at, say, a B lender, a lender who would lend to, say, someone who's been bankrupt or in a consumer proposal or who has bad credit, their interest rates are essentially the same as a reverse mortgage. So those interest rates are, based on high risk lending, which it is a little riskier to lend to someone who's not qualifying for these funds based on credit history or the ability to repay. Being in my world, I don't really look at it as a risk, simply because I find in general, everybody, regardless of age or regardless of product, tends to get hung up on the interest rate. And you have to look at the product itself, what you need it for, what you're trying to achieve, and the benefit. And really, it's so easy to get hung up on rate when rate is the very last thing, regardless of the type of mortgage you're getting, regardless of what your financial situation is. The last thing you should be discussing is rate. The first thing you look at is the financial situation and what you're trying to achieve.
Yeah, I like that because what you're talking about is a holistic approach. I just
Correct.
want to say hi to Francine and Catherine. I see they've popped on online. And I just want to remind all of our anyone coming on here live, if you have a question for Lola on reverse mortgages, please post it in the comments. I'm keeping track of that. And and Twyla posted the question, but just before I go
Yeah,
to
I see that.
Oh, you do? Okay, you're on there. Awesome.
Yep.
Look at us getting this working. So, I like that holistic approach. I think that's so important because people do only look at one piece sometimes, and it's everything. And like you said, and I just want to speak to this because, again, I think this is so valuable. If the alternative is taking money out of investment income, and you look at what you're losing in terms of the return on the investment, then this may be a way to avoid that. And I know, in our line of work, people come to us for financial help, as I said, and, they'll often look at all the options prior to talking to us. And one of them we often get is, I have this investment money, should I withdraw it? Now, this is my, in my opinion, my own personal opinion.
Right.
Personally, I discourage people from doing that. I think that,
Yep.
I see too many people living in poverty at retirement. I see people struggling on pension income. If you have pension income, you have an RSP, you have money set aside, it's creditor protected except for maybe what you've contributed in the last year. I really want people to kind of hold that sacred and hang on to that if they possibly can. So I'm just going to go to the question. So Twyla says, to clarify, they bought a new home in Nova Scotia, assuming it was bought with no mortgage. Right, I got it. I have to put some more. Then they got a reverse mortgage on the new home. Okay. So do you want to speak to that question?
Yeah. So what had happened in this specific situation is the customers had $100,000 in debt outside of their mortgage on their existing home in Ontario. They had entered into an agreement to purchase the home in Nova Scotia, having been told by their broker in Ontario that they qualified for a traditional mortgage, which you would income qualify on. The unfortunate thing that happened is they had waived financing. So they were committed to this house because they waived the financing clause on the purchase. 3 weeks prior to closing, I don't know how it happened, but the broker had missed that $100,000 in outstanding debt outside of the mortgage. So when the calculation was done on the sale of the home in Ontario, they were going to be $130,000 short at closing to buy this new home, and they didn't qualify for a traditional mortgage. So basically what we did was we bridged the gap between the sale and the purchase, and we did a reverse mortgage on the new home for the amount that they were going to be short.
Oh,
If that makes
interesting.
sense.
Yes, it does. And that's quite again, that holistic creative approach.
Yeah, because it's a statistic not a whole lot of people know. 62% of people in Nova Scotia are retiring with a mortgage.
Yeah, I'm not surprised by that because, and again,
Yeah.
I this disturbs me greatly because I see more and more people coming in their senior years with a mortgage. And I mean, I've been in this industry since, the late 90s. And so there's quite a, 30-year span of seeing a lot of changes, and it's terrifying to me.
And to be perfectly frank, if you consider that the old age security and the Canada pension combined pretty much adds up to poverty level living.
Yeah. Yeah.
For absolutely. Seniors. And so if you have $100,000 in an RSP and you take $20,000 out, you're going to lose 20% of that right off the top. So now you're at $16,000. But when tax time comes, you have to add $20,000 in income to your taxes so that the government can tax you on it. So why wouldn't you go this? So like you said, it's the whole picture. How much are you paying in taxes? The $4,000 you've lost off the top. And the thing that people aren't keeping in mind as well is, so a reverse mortgage is normally done in 3 to 5 year terms. That doesn't mean at the end of 3 or 5 years you have to pay it back, but you can restructure it at the end of that time because a home continues to appreciate in value. So what it was worth, in 2012 is not going to reflect what it's worth in 2017, 2020. It could have appreciated by $20,000, $30,000, $50,000 depending on the real estate market. So then we could restructure your reverse mortgage and get you additional funds, which is why they cap the reverse mortgage amount at 55%, because the odds of a home's value falling by say 45% just doesn't happen.
Yeah.
So, and if it does, the lender takes the full risk. The customer never pays for that.
Right. Okay. Interesting. So we looked at we talked a bit about traditional mortgages, and then we kind of went over in the other end and we talked about reverse mortgages. But there's a product in between I just want to bring up as well, because it's kind of those, what are the alternatives between the traditional mortgage and reverse mortgage, and I'm referring to the equity line of credit. So
okay.
So tell me where that if you're looking at regular mortgage, reverse mortgage, but then there's this line of credit to pull out some equity in your home, where does that fit into the picture for you?
Okay, so you could register a mortgage 2 ways. So I guess we start right at the beginning. So you have a standard charge, and then you have a collateral charge. So a standard charge would register the mortgage for whatever amount you borrow. So if you borrow $200,000, there is going to be a lien registered against your property for $200,000. That amount can't change. You can't borrow any more money because it is a standard charge. With a collateral charge, in that situation, they either register a zero amount, and the reason they do is there's going to be a lien registered against your property by whichever lender is offering this collateral charge. And the reason they would register a zero amount is because those amounts are going to change. You can have a combination of a traditional mortgage. So let's say you would have a traditional mortgage for $100,000, and then you would have a line of credit limit registered for $100,000, right?
Yep.
And you use them in combination. And that's why with a collateral charge, you're either registering, say, a zero amount, or you're registering 80% of the appraised value of the home, because you can't go beyond that amount.
So if it's not a traditional mortgage where you borrow the money and just pay back X number of dollars, but
Correct.
It's a home equity line of credit or one of those products, then they'll register it up to 80% of the value as almost kind of like an open amount in a way.
Well, the global limit is 80% of the value of the home, which would be the combined traditional and secured line of credit.
Right.
You cannot borrow more than 65% of the value of a home on a line of credit. So a line of credit, the most that you can borrow is 65% of the value of a home. And that's
Okay.
a federal guideline.
So that's interesting because again, and I know there's lots of nuances to this, but I'm just going to kind of summarize. So traditional mortgage, borrow money X dollars, it's fixed, you pay it back, so that can be up
Correct.
to 8%. Line of credit on your home, an equity line of credit or home equity line of credit, HELOC is referred to, up to 65% of the value of your home.
Correct.
If it's just that product, then there's a combination, of course.
Right. Yeah.
And then the reverse mortgage, which is where you're borrowing money against your home, but there isn't an obligation to pay it monthly. It has to be paid back at some future time. Or, and I don't know if you said this, but I'll add, my understanding is, or when you sell the home or refinance the home or you die.
Correct. It's paid off when you sell the home because, and it's
just
something.
And that's 55% max. I just want to add that little piece before.
Yeah.
Okay.
Yeah. So. And the other benefit, which I didn't mention with the reverse mortgage. So traditionally, and we're going to talk, say, people my parents' age, people in their early 70s and older, traditionally, with that generation, the man was the one who qualified for the mortgage. So, the husband would qualify for the mortgage. He would be on the mortgage. He would be on title of the property, and his spouse would not. So unfortunately, and I've seen it happen so many times, the husband would pass away, the wife is left behind, but she's not on the mortgage, she's not on title. She doesn't want to leave the home, but unfortunately she doesn't qualify through traditional means. So she's forced to sell that home. With a reverse mortgage, the beauty of a reverse mortgage is that it's registered against the home itself. So if one of the spouses passes away, there's nothing changes. Absolutely nothing changes. The reverse mortgage is triggered when the home itself sells. So that the person left behind doesn't have to worry that now they're going to have to sell the home or now they're going to have to try to qualify. Regardless of which spouse is left behind, they don't have to leave their home.
That's really interesting to me because, and it wouldn't necessarily work in this situation, but one of the sad stories that I'll tell when I'm doing presentations and just I talk about various things, but one of them is about why it's so important to have credit in your name for this very reason. Because I'll often tell a story about a lady in her mid 80s. This was several years ago down on the South Shore, and her husband died, and everything was in his name. And they had a mortgage on their house, which again was incredibly sad. I think she was like 84 or something, and she couldn't get a mortgage, and she couldn't keep her home, and she had to sell her home. So in that situation, now the issue was, of course, she already had a mortgage, and so even getting a reverse mortgage at that point would have been an option.
Correct.
If there was enough of that 55% room, but it was just sad to me that she had to sell her home.
It is. It's devastating because with a traditional mortgage, death triggers the need to pay that out.
Yeah.
Or the need for whoever's left remaining to qualify to assume that mortgage. Whereas with a reverse mortgage, death doesn't trigger a payout.
Right. Do you do a lot of reverse mortgages? Is this something do you do a lot now? Do you do more? Do you do less?
I'm finding I'm doing them more because the need is greater. When I first, of course, when I worked for a major Canadian bank, they don't do reverse mortgages. In the last couple of years, we are finding some lenders are starting to dip their toes into that space. But Home Equity Bank of Canada is, the one lender that does reverse mortgages here in Canada. The benefit, again, as well, is that they are a registered Schedule I bank, which means they are regulated federally. They are insured by the CDIC. There is little to no risk with them. It would be like dealing with any bank. And so everything is on the up and up. There are costs to put a reverse mortgage in place. Of course, you have to have a lawyer. You have to have appraisal costs. The actual cost to put a reverse mortgage in place is about $2,000.
Which is probably comparable to a traditional mortgage, I'm assuming.
It absolutely is. But the benefit, too, is that you can deduct that money directly from the proceeds of the reverse mortgage you're putting in place. So realistically, nothing comes out of pocket.
Right. I just want to share. This is probably I've known about reverse mortgages for a long time. And again, you know, I'm spanning back 30 years in the industry, and it wasn't very common. In fact, there was only one or two places I knew that did them. I didn't even know as a mortgage broker you did these. So, you know, when you spoke
Mm-hmm.
about it one time, I thought this is great. That's why I wanted to get you on here. But I remember a case where I like it's kind of, to me, it's almost the, you know, epitome of a situation where reverse mortgage makes sense. And so this couple was in Southwest Nova Scotia, so they were outside of that main area, and they were in their home. They had no mortgage. They were both disabled, and they were on disability income, so they barely had enough money to live. Getting a more, and they came to us because they had some debt and they wanted some help financially. And, you know, first of all, we looked at, because we always look at all the options. So can they get a traditional mortgage? No. They were, you know, in the quote unquote boonies. They wouldn't have qualified that way. They didn't have enough income. You know, that just didn't work, even though they owned it free and clear. So then we look at, okay, could they get an equity line of credit? Because at least the payments would be lower. But again, no, they didn't qualify, same reasons. And even for us, I'll come back to reverse mortgage when it's swing over the other side. You know, we couldn't do a debt settlement to the creditors or a bankruptcy because they had full equity in their house. They would have lost their house. We would have had to do 100% debt settlement. They didn't have the cash flow. So kind of right smack in the middle of all that was a reverse mortgage. And that's when I really started to look into it. And it just seemed to me that, you know, here's a couple who they wanted to stay in their home. They didn't care about the equity. They needed the money, quite honestly, to live. And until they couldn't stay in their home anymore and they needed to go to a care facility, they didn't have any family they were leaving any equity to. I mean, it just made complete sense for them to look at a reverse mortgage. So they were able to pull the 55% of the equity out of their home. It gave them the cash flow they needed so they could pay for medications, pay for groceries, and do the things they needed to do and stay in their home. Is that a pretty good example of?
Absolutely. Yeah, absolutely. I mean, if you look at, say $100,000, if somebody has $100,000 in equity in their home that they can access, well, on a monthly basis, that $100,000 could add up to almost 10 years worth of payments of $1,000 a month into your bank account to supplement your income.
Yeah.
Right.
And I guess that kind of leads me to what others, you know, I've heard of some of the potential disadvantages, because of course, if you have a house and there's equity in it and you're older and you want to, you know, leave money to your children, well, then of course, I mean, any mortgage, but, you know, if you get a reverse mortgage, you're not paying anything on it, that amount, that lien against your house, of course, is going to stay there until you sell it or until you.
Correct. Yeah.
So it's going to take some of that equity away from a potential estate. So, you know, it needs to be looked at from an estate planning purpose as well. What would you say to that?
Well, you're right. It does have to, you have to look at it from an estate planning sort of perspective. But if you do have investments, you know what I mean? You're preserving those investments so they can pass through your estate. And, you know, the reverse mortgage ultimately is going to get paid off upon the sale of the home. And there will still be, you know, 45% of equity in that home. So there would still be some proceeds. But I look at it from the fact, you know, from the point of view as well, that if you're healthy enough that you can remain in your home and you're using the reverse mortgage money to, say, hire a landscaping company that will do all of your snow clearing and that will do all of your lawn work and yard work and the rest of it, you know, and not forcing, say, an older couple to move into either an apartment building or an assisted living facility, which we know how expensive, how prohibitively expensive those facilities are. I still think any potential negatives are far outweighed by the benefits of a reverse mortgage, because I've heard so many stories of older people moving into, say, an assisted living facility that's costing them between $5,000 and $8,000 a month.
Yeah, I know. It's crazy.
It's terrifying.
I mean, we have people coming to see us just because of the cost of their parents being in these facilities, and
exactly
trying to help them.
Right, and I think if you approached, say, people our age who have older parents, and the argument is, you know, upon their death, you'll inherit a home that's worth $500,000. But you know, getting to that point, you're going to have to find a way to find $5,000, $7,000, $8,000 a month to put your parents into an assisted living facility, or you forego that amount, and upon their death, you only get $200,000. But they happily stay in their home, and there's no cost to you. I don't think anybody would say, no, I want, the larger inheritance. I think most people just want their parents and their family members to live healthy and
Yeah.
happy.
Speaking from, so I'm the last of 8 children. My mom's 94.
Wow.
And she is home, and we're all helping to care for her. And yeah, I mean, I would completely agree with that. That
Yeah.
the most important thing is that we're keeping her home as long as we possibly can. We've already renovated the bathroom. We've renovated a bedroom. A couple of things that just popped. Oh, sorry.
Yeah.
Go ahead.
I was going to say people use the reverse mortgage for that too, to do
Well, I
renovations.
have a question on that, and we fortunately didn't have to, but kind of around that. But just before I do, one other thing that popped in my mind, because we were talking about reverse mortgages, if it's part of the estate and there's some equity, but it uses up some. But the other little piece of that, and again, from a holistic point of view, is life insurance. So if the person has life insurance or more, can you get mortgage insurance on the reverse mortgage?
Well, you mean like creditor insurance?
Yeah, like when you take out a mortgage, and I'll probably do a whole nother podcast on, or whatever this is, vlog, on kind of that, on insurances and mortgages. But yeah, like if you get a mortgage, of course you can get mortgage insurance. So is that the same with reverse mortgage through the lender?
Actually, Home Equity Bank doesn't offer mortgage insurance per se, that if somebody died, it would automatically pay out the balance of the mortgage, because with most life insurance, creditor life insurance policies, so when I say creditor insurance, I mean the lender you're borrowing the money from will have an insurance piece where for an additional monthly fee, you can put life insurance or disability insurance on your mortgage, and then if something were to happen to you, correct, and you're paying monthly, and if something were to happen to you, the balance of the mortgage is paid in full, which everybody says, well, that's great, but because it's creditor insurance, you don't name the beneficiary. The beneficiary is the lender who has lent you the money. So you can't get traditional creditor insurance. However, you can buy term insurance or correct.
Yeah, that's why I'm actually going to do a whole interview on this, because I think it's important as well. So yeah, that just occurred to me. So there is another way to protect the equity that would be through an insurance product.
Sure.
So here's a thought. I was just thinking, because again, I see a lot of families, a lot of people, again, they'll come to us and they're on their family home, right? So we have maybe the son's coming to see us, but his name is on his parents' home, or the parents are coming to see us, but 3 of the kids are on their home. And this, certainly complicates things a little bit when we're trying to find solutions. And so I got to kind of think this through as I ask it of you. So let's just say, so we have parents and they put their 5 children on as part of their estate planning. And the parents are older, one parent or whatever, and they're helping to care for them. And the home, so the idea is that when the 2 parents pass, the home will then go to whoever in the family wants to purchase it. So I'm just kind of thinking out loud here, but let's say that one person wanted to purchase it, but they don't necessarily have the down payment. Now we could get into discussions, they own a part of it, so that's part of the down payment. Is that a possible use of a reverse mortgage where, if all the siblings and the mother or father both agree, they could potentially do a reverse mortgage to take the money out? I'm thinking creatively here, to use as a down payment for one of the siblings to purchase the home. Do you follow me on that?
Yeah, I do. I do. So the first thing is that if there's a bunch of people registered on title, that can muddy the water for a reverse mortgage.
Well, they all have to.
Right.
Oh,
and
not because they all have to sign, but for another reason as well.
Their age, right? Because you've got to remember that a reverse mortgage, you have to be.
Every person is an applicant. Yes.
Correct. So that can be an issue. But the other piece of it is, and I've done these so many times I can't even count. You will have parents who have a family home, the son, the daughter, the niece, the nephew, whoever wants that home. And they don't have the down payment, but they do qualify, say, for a traditional mortgage. You are legally allowed to gift the equity to that person who is buying your home, and that will be the down payment and the closing costs.
And that's what I was thinking. That becomes the down payment. Okay.
And that happens all the time.
Okay, interesting. That that just popped into my mind. This has been awesome. I said we were going to have a real short interview, but I feel like I could talk to you all day about this. So I think we kind of, we talked about what is a reverse
Yeah.
mortgage, we talked about the pros, we talked about the cons, we talked about the alternatives. I think we kind of covered off what I had intended on.
Hmm.
We are going to start to wind things down. So I just want to let anybody know who's listening live, if you have a question for Lola, please put it in the comments. We'll keep an eye on that as we just start to close this down. And of course, the replay will be available, and you can still comment, and Lola and I will certainly engage
Yeah.
with you.
Happy.
Yeah. So anything else that you want to add on reverse mortgages that maybe we didn't cover?
I mean, I'm a big believer in reverse mortgages simply because, and I haven't done hundreds of them by any means, but every time I've done one, there's been a very specific reason. And I personally don't see a whole lot of drawbacks to them. I get to see people from all walks of life. The thing that frustrates me more than anything is how limited income is for people who retire. Say they've worked all their lives, they have managed to put aside some investments, but they don't have a big company pension, and all they're living on is CPP and old age security. And, we're living longer and people are healthier these days. So unfortunately, if you're retiring at 65, you potentially have another 25 years to live. And if you're getting, say, $1,200 a month from the government, that's just not going to give you what you need in order to, proceed. And then if you drain all of your investments, that might give you another 10 years. But so, you've worked this hard to pay off your house and potentially build some equity. And I think a reverse mortgage is just another tool in the toolbox to help you live with some financial freedom. Maybe you enjoy your retirement, you travel, and that money, like I said, is 100% tax free. And if you want to repay it, you certainly can. If you don't want to, you don't have to. There's just, you can do so much with it. And like I said, that woman that took out a mortgage at 103, she didn't need the money, but she didn't have the means to take $150,000 and hand it out to her grandchildren or great grandchildren, and she got to see
How
the fruits of her
exciting is
labor.
that?
It was thrilling. Like, I mean, when I
That just warms my heart.
it's awesome. And she got to see them take trips and buy vehicles and maybe use it as a down payment for a house. And she got to enjoy all of that because, let's be realistic, when you're 103 years old, odds are you're not going to live a whole lot longer. And it's such a joyful thing to do, right? Because once
I
you're,
just think that's
yeah,
lovely.
I think it's wonderful. And yeah.
Well, what a wonderful place for us to end the conversation. I have to say, I'm kind of super excited about this, and it's re-energized me in terms of looking at reverse mortgages as another, tool in our toolbox when people come to see us. Because, contrary to how this might sound, I take great pride in the fact that when someone, walks in my door and comes to see me, if I can send them back out to someone else and they can find a solution and they don't have to declare bankruptcy or do a consumer proposal and they can keep their credit rating intact. I mean, that's, that means so much to me. So you're such a valuable resource to me anyway. And here is this another product that I just, didn't have as much knowledge around. So I really appreciate you taking the time to hang out with me this morning and share that. So not only I get to benefit, but everybody else listening gets to learn more about it as well.
Yeah, well, I really enjoyed it too. And as you said, I like to see I like to help people get into a better financial situation. Because when that happens, when you can make that happen, it does come back to you. I've got people who do call me just to compare, to shop around, whatever. And if someone is already in a good financial position, I'm going to tell them they've done the right thing, or they should stick with their lender, they should stick with their bank, because it doesn't benefit them, and nor does it benefit me to try to switch somebody out or try to take somebody's business if it's going to cost the customer ultimately money out of their pocket, right? My only intention is to put somebody in a better financial position, and I think a reverse mortgage is a great product for the right person.
Yeah. Awesome. Thank you so much. So, Lola, if anybody wants to reach you, what is the best way for them to do that?
They can message me on my Facebook page. I've got my own broker page. I've got my own website, lolagentile.ca, or they can email me. That's on the banner there, or call me. I mean, email, call, message on Facebook. They'll be able to find me.
Great. Well, what we'll do when we're done here is, and this is posted, we'll put a link to your website as well. And of course my details are there. So, we're available. Like, if you need help, if you
Absolutely.
are struggling financially, if you're not sure what to do, reach out to me, reach out to Lola. We work together. We will help you find the solution that's best for you.
Absolutely.
All
Evenings
right.
and
Well,
weekends are not a problem.
yeah. I'm not going to say that on air. Not that I don't check my messages then, but yeah.
Oh, I get it.
Yeah, no, I'm playing. Okay, well, this was really fun. Thank you so very much. I'll look forward to seeing you at our future meetings that we have together. I really appreciate you taking the time, and contact details for both of us are below for anybody who wants them. You have a great rest of the day, and we will chat more later.
All right, thanks. Bye-bye.
Thank you. Bye-bye.
Bye.
Thanks for everyone who listened,
Thank
watched,
you.
and participated. Bye.
Bye.